Good morning. Hope you guys had a great weekend. We're starting out with more of the same. Trading range. Kind of quiet action here so far. A little dip and a recovery. As you can see here on the current bar. Little dip down, took out those lows, but came back up. So far, no damage done. We'll see how far it can get back up into the range here. But with the break of this low, based on this time frame anyway, we'll have to see if this rolls back over. Anyway, the markets have been quiet. There's been strength here and there, of course. But as you could see on this weekly chart, it's been several months of going sideways at the top of the range, which is bullish. It's just building this base. Now, one of the things that has to be considered, especially with the market internals, where they're at, which have gotten to a further extreme with last week's price action, is that the break of this base will have big implications and probably will result in a relatively large move to the downside. And the thought process behind that, which we always say, charts are a reflection of what others are thinking, what they're doing with their money. And what they're doing with their money now is accumulating on dips in anticipation of selling at higher prices and making money. Simple. And if it doesn't go up and it breaks these lows, obviously all of those that have been accumulating here are going to sell. I shouldn't say all. Some will, the faster they sell, the faster it'll go down. It could be a slow grind to where it comes down to here again, where buyers will want to step up again. As you look to the left, you see, buyers were there before. And of course, they're going to step up there again. Then we see how much of that actually results in a move higher. So just like here on the hourly chart, we look at it exactly the same way. Prices came down here. They retested actually 2 times and they rallied back up to where sellers were and they knocked it right back down again. And now it broke through that. So when the buyer showed up this time, it went down to the next level. So this is what causes choppy price action, where you have levels that are relatively close together. And so one fails and then there's another one behind it. So now that is creating this one, you could see pivot low. We'll see if this comes all the way back here. And then we look at that as, okay, it was a breakdown failure. In any event, it was a real breakdown. We didn't know it would fail, but now we're just watching to see how far it can come back up again or what's going to happen. Of course, at the end of the day, what kind of daily bar we have and so on. If this rolls over and we get a red bar, well, we're still in the upper half here, but now teetering on the first edge of moving lower. As I said, the internals, they're telling us what's coming, right? And what's coming is some type of correction. And you might say, well, Greg, it's been correcting now for a long time. Well, yeah, it's been doing that from prior warning signs and corrected, and it came back up, and now it's going sideways. But as it went sideways, rather than coming down here fully, which would have been a much better to launch a new move, now it's all the way back up here and telling us that breakouts historically have a greater likelihood of failing. So this is something that even if this closes strong and it breaks out and pops, historically, those patterns tend to fail and come back in again. So that's the unknown. Crazy things can happen, and this can go to 0.6. We don't know when it pops up higher. So just being aware of what we're dealing with here and knowing a correction is going to come. Right? I've been doing this so long, looking at the simplicity of just these 2 market internals, and you have to rely on what works. In addition, while we don't talk about it that often, I did show in the room, I guess the week before last, and I mentioned it last week, the percentage of stocks above their 200-day moving average is up at almost the highest level where it's been historically. So while it's redundant with what I'm showing you here, sometimes I look at some other things and say, hey, is this in confirmation too? And it is. So, it kind of adds to the, I shouldn't say reliability, because this is very reliable, and why I cut down looking at so many other market internals. In any event, keep an eye on that exit door. All right. But won't buy signals. What do I say? But won't buy signals until a sell-off, just a consolidation over time. Well, we don't know. We assume the trend will continue until it doesn't. But we know the likelihood of the trend failing historically based on the internals will happen. When it'll happen, we don't know. So we just have to go with what's on the charts until it changes. So SPX levels. Well, I don't know where the premium is here today, but on the
call. Hold on one second, because that was an important point. What I was saying was, could they bobble around for 2 weeks and wear off some of that and break out, and that be a more confident breakout if we went sideways for 2 weeks? And I'm saying yes, but the last comment you just read there was, I think it's a mathematical certainty or uncertainty, depending how you phrase the question, that that oscillator in sentiment is not going to go down to give us a buy signal with just the markets going sideways. That's the difference I was highlighting for McGraw.
I'm not sure that that's true, Dan. I think it would be dependent on, so what could happen, and I've seen that in the past, is that we have, one or two severe, nasty, ugly down days, and then they recover. And, through that type of price action, this could, and it may not get all the way down to a buy signal. I mean, we just don't know. That's why, we look at this I know it's not going to change very much today, but I'll look at this every other day and, a couple of times a week, because I know it's not going to change that often. But we could have some nasty down days that have no kind of follow through that increase the uncertainty in the markets. And those nasty down days will bring this breadth internal lower. And of course, we know that nasty days like that will have an effect on sentiment. So what you've kind of referred to is, okay, this thing is going sideways and dipping here and there, so it wouldn't come all the way down there. But what kind of day is that we experience that could really increase the uncertainty? But we don't know. We just know what is right now.
Right, and that's why I said it was a good question, because my assumption and my statement was, if we bobble around and don't violate last week's low, I surely as heck don't see sentiment getting to 1.0 and Brett getting it to negative 200. But you changed the assumption a little bit with a couple nasty down days. I was saying no nasty down days, just bullish 2 week consolidation. But yeah, I think
I don't think that would change.
Right. So I hope you understand the discussion, McGraw.
But so let's just pretend here, and you have a bar like that, tomorrow, today, whatever, and you're looking at that, but it holds last week's low, and then it comes back up again, and it bobbles around, that thing that you got on your dashboard with the head, this girl with the shaggy grass dress, and it does that. Well, those kind of days will turn sentiment. So, I mean, if we all saw that, we'd say, oh, well, 1, 2, 3 to the downside. Every bar creates some assumption and belief. And then bar by bar analysis is going to lead us along that belief as to being correct, or to some degree is going to change it or change it completely. I mean, that's the use and power of bar by bar analysis. And then, of course, support and resistance and everything else that we look at. Keeps us honest, so to speak, and protected from our own emotions and biases by the chart telling us what's happening and changing. So levels, I would look to go below last week's low. You're saying 35.80. Well, that's kind of like a bunt from here, 35.80. If this rolls over here, and for whatever reason, things get ugly, there's nothing to stop it once it gets below 3,600. So if we were to get a decline to 3,600, this premium increases. Maybe, we see it stabilize, we can go a little bit lower. But this has been tested once. So we don't really have this line of protection to the degree it was here, right? So the takeaway from that is to recognize that while it's created this new support, this level here has been used up. And now what preceded this was all of this price action. So we've already got, a number of traders, things are popping here for whatever reason. We've got a number of traders that, are somewhat doubtful about what's happening here right now. So this 3,600 level as a whole number has been weakened by this move down that was preceded by this sideways price action. So 35.80 may not be so safe. That's how I see it, based on this price action here. Whereas the upside, above 36.80, you were saying 35.80, above 36.80, since now we've got multiple highs up here, I think that's a bit more attractive, but we could watch this for the first, 5 or 15 minutes at the open to see how things act. So as I can see, and you can see right now, that probably news, whatever occurred, rejected prices pretty sharply from this area. So the up above on the call side, I think, is going to have better odds until we get more information. Well, that's MC and YouTube is saying wait for the MAs to catch up. That's one way of looking at it, MC. But again, the markets and prices and traders aren't going to wait for the MAs. Sometimes things consolidate long enough where moving averages catch up. That's a valid concept, of course. But let's assume that this closes this way. Now we're going to have a correction bar. Right? This current bar is going to be what I call a correction bar, meaning it took out 2 bars lows and rallied back up again. So if it takes out that high, I think you're going to get left behind as this thing runs, waiting for those moving averages to catch up, which brings you back to bar by bar analysis. Price is what we trade. These bars are what lead our beliefs about what's going to happen, not these moving averages. Moving averages are what we call a visual aid. Sometimes they work out perfectly like that. And when you see them with 20/20 hindsight, you think that's going to happen again. Well, when it doesn't, it's the price action is the reason why it didn't happen. Well, let me continue here because it's getting a little long. And so the S&Ps was an amazing trade. I was kind of watching that on Friday when we got in it, that long trade, and watching while everything else sat there or went down. We had this great long trade in the futures and Qs, and they don't see that too often where, it just did so well. Anyway, the markets are always doing things that are interesting, educational. So that was a great trade that we had Friday morning. It was the only one I did, and it did so great. I was just like, I didn't even want to press the button anymore. The Twilio was great. That was the overnight. Anyway, and that EHTH, whatever that is, that thing popped nicely. NYM showing a little weakness here. That's dipped down, kind of what was happening on Friday. But overall, it's still okay. Just consolidating up there. It's getting rejected from that 30,000 numerous times. And I'm beginning to wonder. And what I pointed out in the newsletter this weekend, I said, look at the distance between the highs here. How they're getting closer. So momentum is slowing, but ultimately it's got to break down. Right? So momentum slowing doesn't break a trend. It could go sideways, but at some point it has to find enough buyers to break above this level. Just same with the S&Ps, which had a more defined, trading range like that. Whereas, all of the buyers have been buying the dips, eventually, like I use the saying, well, it went down because it didn't go up. Well, no kidding, genius. Well, when you realize the power of that statement, you're really understanding that the psychology of the price action and what's going on versus saying, oh, that Haramai, whatever, said it wasn't going to go up. It's not about that. It's about what you and I and everyone else are doing here, where this power move up leads us to believe it's going to go higher. And so far, there's this uncertainty, but it's not breaking down. So at some point, longs do get tired and say, you know what, this thing isn't going. And somebody hits the bid and another person hits the bid, and before you know it, you got a correction. Russell, it's been the best performer lately, and just sideways, bottoming tail. This is the new bar, but trading range going on. So we're just waiting here. Bonds, big giant mess at support, accumulation, but we'll see. And oil down here a little bit, but looking great. The dollar's been going down, and that helps oil. And there you go. Oil's looks like it couldn't go higher. It's right up at this resistance, and it does have a wide range bar, so it probably has a little backing and filling to do. But you're going to want to keep an eye on this. Is the easiest way to keep an eye, right? Is the ETF, and just setting an alert up here. If this starts popping higher, it's going to have an effect on the markets, because it's not talked about much, but this decline has been going on for a while here, and that begins to turn around, well, has effects on oil and other things, which we'll get into when and if that happens. And gold just, was quite a disappointment for myself. I thought this was going to turn around, and it looks so great with this green bar coming back up, and now, it's broken down. And while the monthly still looks okay, right, this is getting kind of ugly, and now it's broken the 200, which was lined up with that support. And we'll just see. Silver starting to break. Held up a little bit better, but now coming down here. So as always, we keep an eye on all of these things. And some of you that were talking about Bitcoin, wow, what a pop right back up again after that nasty bar. So some wild price action going on there. So all yours, Dan.
All right, good morning. We have a lot of open positions, so we're doing fine. We're trading the bullish side and individual. We got a couple bear call credit spreads that are doing fine, but with the internals the way they are, we're still going to trade what we see. But 1 foot out the door, as Greg said. And I was thinking to myself this morning, even El Arian was on the TV today, and even he's joining the party of there's nothing to worry about. He says the market's going up on 3 things: vaccine hopes, the stimulus from the Fed, and what was the third thing? Money coming into the markets. And I wrote in the letter, there was 80 billion flown in from the last 2 weeks. So he says, yeah, the path at least direction is up. So Greg's in. Hey, Greg, your drop down, and also Sarv's War, your drop down. If everyone can change it, all panelists and attendees. So I was thinking to myself today, yeah, this could go on. We could rally for another week, get those internals even more cooked. And I was just thinking to myself, what would be just like one logical reason for the markets to gap down today or whatever? And I told myself, negative news on the vaccine. The market's been gapping up huge the last 2 weeks on news. But what if somebody comes out and says, "Hey, we have all these side effects now"? Well, that's going to put a little wrinkle into that reopening scenario of everything's beautiful. All right, enough of that. So all our opens are fine. Ask me if you have any question. I sent out a couple adjustments on gappers and knocks and something else. YouTube's asking about PFSI. PFSI, I can't tell where it's gapping pre-market, and it's just in a trading range. So unless I get a potent reversal bar, really don't have any interest of that. I'm just actually noticing our Norwegian cruise line here has a nice breakout pre-market. We're core of that. We got into Carnival. We've been trading the oils really well off this low. Jets. It's just we gave this to our ETF trader here and here and in the two gaps. Unless you just share sized it, they messed up our entries. MJ here. I think that is a beautiful long-term low on the monthly. Look at that. Big price void and a W bottom. So that's on the monthly. So if you're trading the monthly, that's fine. Stop the month's low. But the daily, weekly, it makes it difficult here to get on board unless you just get on board with a big stop. Yeah, so we've been selling a lot of naked puts also, saying, yeah, I'm going to sell you a put down here and I'll take the merchandise if I get filled. And I had one of those on ACB in the letter today, and it's gapping up a lot here again. So I hope that doesn't mess us up. But I'd like to get in the ACB marijuana stock as a core long. iPod William, yeah, here's another one. I said let's sell an $18 put. Now we probably aren't going to get filled with that gap up. XBI breakout. I want to sell puts, and I see it gapping up here. NSC Scott. Well, good, McGraw. That was a perfect entry. I wish I did too. You want to sell a put spread 235? Sure. If it takes out, it's just going sideways here, but NSC's a railroad. The transports have been strong. I'd minimum wait for it to take out Friday's high, but yeah, it looks fine. We're in FedEx as one of our open positions. Jacob Poe is asking about BLU swing core. BLU. Actually, yes, that is a beautiful. Daily, weekly, monthly are in alignment. It's not. When I say core, compare this one to MJ that I showed you. I don't call this a core because that is a nasty, nasty breakdown bar, but it leaves a price void and it's fine. So, I don't care what you call it. But the weekly chart, I could see it going somewhere $4 to $5 somewhere. So I call it a swing with a pig target. So yeah, it looks fine. I'm going to put that in a window. Blue, our boy Blue. Chewy. Chewy, that was, yeah, it was a wide range breakout. So Dave, you can with a stop Friday's high. I'll put it here on the list. It is very, it had a beautiful breakout. It's just your stop has to be Friday's low. This would be a fantastic 1, 2, 3 if we get a pretty, inside bar. And then tomorrow we buy over the highs. EHTH, this was another one. We're going to sell a naked put. We're in Riot. We're in Riot as a core trade, and it's gapping up here, so that's good. We have naked puts and a covered call. Work. I came close to putting this in as a weekly put spread because this is a buyout rumor by Salesforce. But so the premiums are juicy because of it's in the middle of news. But the 3530s are huge. And the only reason I didn't do it, I didn't want to get barraged with emails from people saying, Dan, you always tell me don't do a 1, 2, 3 that's far from the 20. And you're right. You're right. But I mean, look at the 35s. Look where it is here on the 15-minute chart. That would be the bet that we were making. It actually gapped down here and is powering back. Look at crazy Nikola here. Now this one gapped up on news that General Motors signed a deal with them. They've been talking about that for a long time. And you know what? I mean, the poor Robin Hood people that don't have proper education, I guarantee you, when this thing's gapped up and started ripping on that news, you have those type of people getting run over, and then at the end of the day, when you see them in the local pub, they would be bragging, yeah, I nailed Nikola, I nailed it. They got they get their news feed, try signing a deal with General Motors. Do you think you will hear any of them bragging about that trade now? I don't think so. It's funny how you only hear about the wins, not the losses. From those people. Oh, look at Myrna here. Middle window. I got a lot of gappers here. I obviously didn't get to, but this is another reason I'm guessing the market's up today. Well, stocks up and bios are up. But yeah, that's too powerful. I wouldn't dream of fading that. But it's $60 above its 20 MA. It'll come back to earth someday. It will. Somebody's asking about this HYLN, and we actually do have put spreads on this. Yeah, that's a bearish gap. So yeah, let's see what's going on with that. What strike I have? Yeah, our stop is 2088. So yeah, that is a bearish gap. So the question is, do we want to give it more time? Minimum like 5-minute low if you're in it. I'm assuming you're asking the question because you're in it. If you're not in it, don't dream of doing anything bullish with it right now. That's an ugly gap. Yeah. So that looks like our only problem child of the day right now.